Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. And I thought today I'd tell you some good news as the market's crashing in the Dow and also the NASDAQ and the S&P. We're going to be looking at a stock. We mentioned these energy stocks a couple of days ago, on Monday as a matter of fact, and you can see we've had a good move in those today. But look at what's going on in this stock. This stock is CMS Energy. And it's really quite remarkable. Here's the symbol. And look at this pattern. It's really a classic sort of head and shoulders pattern. This is what they call the neckline. This is the left shoulder. This is the head. In this case, it's actually a double head. And this is the right shoulder. It's clearly in a breakout mode. And you can measure from the lows here, let's say 31.50 up to 34.50. That's $3. If you add the $3 to 34.50, it gives you 37.50, but we'll call it 38. But if you go all the way back here, it indicates right around this level, the previous highs back in February. We should get to that level. So again, this to me is a very low risk trade. Classic pattern. It's coming out of over the neckline, as I said right here, and it looks as though it wants to go higher over the 50 line. So all things are looking good. You got 100 score on the trade triangles. They're all positive, each one of them. Even the daily, which we don't pay that much attention to, but these are the two important ones. Everything is a go on this stock. Symbol CMS right here. Now looking at crude oil. Now crude oil is still, you can see the big slide it's had. We've actually done very, very well with our trade triangles on this, but we had a signal today on the daily, actually yesterday, to really come out of this market. It's a short-term trade to be out on the sidelines. It's still minus 90. It's still, the trend is negative, but we're seeing a little bit of a divergence here on the RSI, so pay a close attention to that. But nonetheless, the trend is clearly down. I would not be surprised to see some sort of pop coming into this market. But there's no reason to pick a bottom, and you shouldn't pick bottoms anyway. Looking at gold, a little bit different picture. We talked about this last week. We talked about the divergence that was beginning to form right here, and you can see we've rounded out. I thought the pattern may have actually gone the other way on the downside. However, we did break out. It's not basically a bull signal, because our weekly, which we use for the trend, is still negative, okay, from 1180, which is quite a bit higher than where we are right now. But our week daily covered at 1094, so we're out of the market right now. We've taken some nice profits on this position, so we're going to stay on the sidelines. We've just crossed over the 50 line. Is this a harbinger of things to come? It could well be, but for now, there's no clear evidence you want to be in the gold market. Now, the euro is a different story, and I think a lot of people have gotten this wrong. The euro is a different story. I think a lot of people have gotten this wrong. We had a signal. You can see this on our signals right here. We used the weekly, and that kicked in today at 11,112.70. So there it is. Right now, it's a little bit higher than that point, but the point is it has made a turn. We use the dailies and the weeklies for trend. The monthly we don't pay that much attention to, because the foreign exchange tends to move a little faster than most other markets. But look at this. You've got a situation where you're over the 50 line right here. It looks as though you've got a trend going up. Not a strong trend, but we may just stall out right around this 114 area, which I would not be surprised to see happening. But nonetheless, there's no reason to be short this market at the moment. You should be either trading it from the long side or be on the sidelines. Now, we talked about the death cross. We talked about this last week, and we said we were doing something on it today. Well, look what's happening to this market. This is the Dow. This has been the weakest particular market. Look at where the monthly came in some time ago on this market right here. This is on the 30th of June, and you can see since then it's moved down. We've had the odd rally, which is not unusual, but the fact is we had this large rally on Monday, didn't follow through, and look what happened. That was partly because of the devaluation of the yuan, which is indicating weakness in China. That's what the whole thing is about this. But we're getting now down to an area that should find support. But before I show you that support, let me show you how you put a death cross on the chart. So you go to chart studies and you use a simple moving average. I've already set the 20, 50, and the 200. Now, if you want to put the 20 on, you simply click here, but that's too much information for me. So I just want to have the 50 and the 200. And you can move this around at will, but you can see the cross is right here. That's the cross. So the light blue line goes below the dark line. And we are changing this on the upgrade. These will be maybe dotted or a different color, so it's easier to spot. But nonetheless, this is considered a death cross. So if we clear the screen and go back, and let me show you some of the other death crosses we've seen in this market. So I'm going to go to my maximum, which is right here. And you can see, based on this chart, where we've had crosses. We had one here. You can see the monthly kicked in. And then we had another one right here. The monthly kicked in before then. The monthly trade triangles are a little more sensitive and catch more of the move. So you may want to pay attention to them. Here again, we just went around quickly there. Sort of consolidation. Did not have a bear market. Same thing here. We had a down. And then we crossed over again. You see how closely the monthlies kick in? You want to pay close attention to them. Here again, we got close to the line. Didn't do it, didn't do it, didn't do it, didn't do it. And finally, we've just created that situation where we just crossed over just yesterday. So looks like it could be a little bit on the defensive. As you can see, we've had a very, very strong bull market for quite some time, almost 6 years. And bull markets don't last forever. They tend to have corrections. They're buying opportunities at times. So let's move on. This is the S&P 500 cash. They don't use the death cross so much here. It is evident, of course. You can see right here and here. But the interesting thing is the S&P 500, if you just go the last 6 months, you can see it hasn't made a death cross, so it's not that important. And you're also getting back to an area of support right around this 2050 area. Should be some support for this particular market, because you can look back and simply see the situation. If you just sort of look there, you've sort of, every time it's gotten down to that area, it's been a bounce. Now, whether it's going to happen this time remains to be seen, because all of our trade triangles right here are all negative, indicating you should be out of this market or short. NASDAQ, pretty much the same picture. You've got this sort of bandwidth of support that comes in here, and unlike the other markets, you see here's the bandwidth right there. So you're getting down to that area where it should be supported. We do not have a death cross in this. And also you have something very unusual. You have your weekly down and your monthly positive, indicating the longer term trend is still positive in this market. Okay, we've taken a lot of time today to show you the death cross, the stock, the CMS that we like very much, and also watch those energy stocks. It's interesting what's going on with them. I'm Adam Hewison from Market Club. Thanks for stopping by and watching this video. We wish you every success in your trading today. I'll see you soon.